You're listening to CFRN, the Christian Financial Radio Network.
Good afternoon, traders, and welcome back to the CFRN Emini Futures Cast. This is the daily broadcast of Indeterminate Length, where we discuss all things Emini, along with some really big ideas on the finer points of trading gold, bonds, crude, sugar, the euro. Joining us today, Mr. Michael Borth. From our trading desk in Chicago, Mr. Burton Schlichter. Now, to get things started, let's go to our host and founder in Studio A, overlooking South Mountain, America's largest city park. Here's Dwayne.
Good afternoon. Welcome back. Today is Monday. 17th day of March, 2025. Happy St. Patrick's Day. Bit of the luck of the Irish, eh? Hope you had a great weekend. Thanks so much for joining us today. Whoever you are, wherever you are, we're always just glad to have you right here, right now. This is our second live broadcast today. We do 2 live broadcasts every trading day. The first one, that's our live training room. That's reserved for members only and those who are taking their 1-week free trial. If you haven't taken your 1-week free trial yet, when Michael joins us here in a bit, about 50 minutes or so, he'll walk you through step by step how to take the trial. There's no credit card required. We'll get your indicators up and running today. And for 5 consecutive trading days, we will treat you just like you were a passport holder. All the benefits, access to all the tools, the alerts, the live training room, everything except, there's only one exception, and that's the members only workshop on Thursday night. If we let you in there, then we'd have to change the name, and that's been the name since 2008, so anyway, he'll show you how to do it as soon as he comes on, and then again right before he leaves. Okay? All right. So by the time this broadcast is over, you will well know how to take the free trial. All right? Now, when the live training room ends each day at 11:30 a.m. Eastern, we take a 30-minute break and come back for this broadcast, the afternoon broadcast, and this one is open to the public. Everybody, everywhere on planet Earth with an internet-connected device. Now, there is 2 different ways you can join this afternoon broadcast live. The best way, only have to do it once. Go to mytradingiq.com. Scroll down to where it says Noon Broadcast. Click the link, fill out the 30-second registration form, and you're done. What will happen going forward is every trading day, you'll get an email about an hour before this broadcast starts. In the email, there will be a link. So at 12 noon Eastern, all you have to do is click the link in the email, and it will automatically log you into our platform. The benefit there is you have access to the question box, so you can ask questions and participate in the discussion. Now, there will be days when you're out of the office, away from the desktop, but you still want to join live. And there'll be some days when you're busy, can't join live, but want to catch up later. You can do both of those via our YouTube channel, which is easy to remember, youtube.com/CFRN. Not only do we broadcast live every trading day on our YouTube channel, as we're doing right now, simulcasting, but we also archive each and every daily broadcast. Currently, there's over 2,700 daily episodes archived for your educational and viewing pleasure. And if you're new to the world of CFRN, it's a great way to get to know who we really are. You can see how we've evolved over the years. Thanks to the power of YouTube, you can scroll back 6 days, 6 weeks, 6 months, 6 years, even more. Obviously, you're not going to watch them all, nor do you need to. But just go in there and poke around a bit. You know, get the feel of things. This is our schedule for each afternoon broadcast. So we're going to dive right in to our daily devotional. And the topic we're on right now is doing things that matter. Today's scripture, John 10, verses 6 through 10. And I'm sharing with you from the Message translation. Jesus told this simple story, but they had no idea what he was talking about. So he tried again. I'll be explicit. I am the gate for the sheep. All those others are up to no good. Sheep rustlers, every one of them. But the sheep don't listen to them. I am the gate. Anyone who goes through me will be cared for, will freely go in and out and find pasture. A thief is only there to steal, kill, and destroy. I came so they can have real and eternal life, more and better life than they ever dreamed of. Again, that was John 10, verses 6 through 10. So, the topic of our devotion that we're in now is doing things that matter, but we're still talking about dreaming wildly. In Greek mythology, there was a great warrior named Achilles. When he was a baby, it was foretold that he would die young. In order to prevent his death, his mother, Thetis, took Achilles to the river Styx, which was supposed to offer powers of invulnerability. And you thought it was just a Led Zeppelin album. She dipped his body into the water, but held Achilles by the foot, and therefore his heel was not washed over by the magical waters of the river. Now, that's Greek mythology, okay? According to the legend, Achilles grew up to be a mighty warrior who survived many great battles. But his fateful day came when a poisonous arrow struck him where? Yeah, in his heel, killing him shortly after. Today we refer to our Achilles heel as something that is our weak spot, a vulnerable place, or in some cases the very thing that will defeat us. For Superman, it's kryptonite. For some people, it is fear. And for many of us, it's a sin lurking around the corner, looking to trip us up. Our enemy is out to crush our dreams and keep us from being people who do things that matter to the kingdom. In fact, he's out to deceive, steal, and destroy us. As much as there is a God in heaven that loves everything about us, there's also an enemy that absolutely hates every part of who we are. John 10:10 isn't just about the abundant life that Jesus gives, but also a reminder that we have an enemy. So many people have dreamed wildly for God only to see their hopes and dreams come crashing down because of sin. Is sin impacting your life in such a way that it is getting in the way of any dream God has for you? Has sin become your Achilles heel? Don't be fooled. Sin will take you out. The enemy tempts us with sin and wants to pull us away from who God wants us to be. We must be alert and of sober mind. What sins are crouching at our door? God's word promises that He will give us the strength to overcome temptation. We must submit our areas of struggle, sin, and even fears to prayer and the grace of God. We must repent of our sin and submit our lives to Him. Let's pray. Heavenly Father, thank you for being the door to eternal life, offering us safety, provision, and abundant grace. Help us to recognize your voice and follow you faithfully. Protect us from the thief who seeks to steal, kill, and destroy, and lead us into the fullness of life that you have promised. May we walk in your peace, trusting in your goodness every step of the way. It's in Jesus' name we believe and pray. And everybody said, Amen. Amen. Happy Monday. Let me give you the numbers from around the world. We'll start here in the U.S. with the cash markets, or the indices, as they're called. Currently, the Dow is up 254 points. The Nasdaq's down 27. S&P 500 is up 17. The Russell 2000 up 11. So no movers, no shakers in that bunch. But there's only one small spot of red. And you know we like to see them all the same color. So that could happen. Being it's the NASDAQ and it's only 24 points, it could happen in the next few minutes. If that's the way it's going to go. All right, the commodity basket, crude oil up 35 cents, trading 67.53 last. Gold up $1.40, trading $3,002.50 last. Silver down 24 cents, trading 34.18 last. In the Asian markets at the close, Nikkei posted a gain of 343 points, almost 1%. The Shanghai rose 6. The Hang Seng gained 185. And in the European markets at the close, FTSE up 45, the DAX up 132, the CAC up 38. So that gave us a green day in Asia. It was a green day for the UK. And the Russell's running in the wrong direction, so at the moment it's still a mixed Radio Monday here in the US of A. So there's the numbers. Let's look at the news. President Trump invoked a 1798 law. Let me clarify. A law created in the year 1798 to expedite deportation of Venezuelan gang members Saturday, though a federal judge blocked the plan for 2 weeks to hear arguments in the case. What argument could there possibly be? Gang member bad. Gang member leave country. Story closed. Oh no. Oh no. The 227-year-old Alien Enemies Act is the only remaining law of 4 passed as part of the Alien and Sedition Acts amid tensions with France. The law gives the president power to deport non-U.S. citizens without due process if they are natives of a country with which the U.S. is at formal war or during an invasion or predatory incursion. The statute has been invoked 3 times during the War of 1812 and both world wars, and was the basis for the 1940s internment of more than 100,000 Japanese Americans. In its invocation, the Trump administration described the recent migration of thousands of members of Venezuela's Trinidad gang, designated a foreign terrorist organization in January, as an invasion. And it is. There's no question. The group is known for human and drug trafficking, and it's alleged members are the target of at least 100 criminal investigations across the U.S. right now. And you know, please keep in your prayers all of the folks affected by these storms over the weekend. Hundreds of homes were destroyed and at least 36 people were killed over the weekend as intense early spring storms moved across the central and southern U.S. At the time of this article, 12 people were killed following a tornado outbreak in Missouri. 6 people died in Mississippi and 3 in Arkansas, among other states. In Kansas, 8 people were killed and dozens injured in a 55 vehicle pileup. Think about that. 55 vehicles along I-70 after an intense dust storm impaired visibility. More than 200,000 people, largely through the Mid-South, were left without power by late Saturday, with the system bringing widespread downpours across the Mid-Atlantic by Sunday. To the north, some locations in Indiana and Kentucky reported 2-inch hail and winds nearing 70 miles per hour. In related news, more than 110 people were injured and 1 killed as of this writing, as high winds and dry conditions spurred wildfires across Oklahoma. To the markets. The Federal Reserve, which this is Fed Week, Wednesday. Federal Reserve is widely expected to hold interest rates steady when it meets this week, but investors will be watching for something else. Any sign that President Trump's policies are changing the central bank's future expectations for the economy. The Fed's latest round of projections released Wednesday will include the much-studied dot plot, a chart updated quarterly that shows each Fed official's prediction about the direction of the central bank's benchmark interest rate. The last dot plot, released in December, revealed a consensus among Fed officials for 2 cuts this year, revised down from 4, as some were already factoring President Trump's expected economic policies into their projections. Now that Trump is putting those policies into action, including an aggressive slate of tariffs, the question is whether central bank policymakers will tweak their outlook for economic growth and inflation, and thus the direction of rates. They could be more worried when they look at the growth trajectory of the economy and model out what they think those tariffs mean. Now, that statement comes from former Kansas City Fed President Esther George in a conversation she had with Yahoo Finance. The markets are currently expecting 3 rate cuts this year, in summer and fall, due in part to concerns that Trump's policies would hold down economic growth. The U.S. stock market dropped 10% from its high set last month, partly due to those concerns, before recovering some of those losses on Friday and a little more today. Some Fed watchers are also worried about the inflationary effects of tariffs, arguing that the worst effects have not yet shown up in the data. Well, we'll see, I guess. Another Wall Street strategist is lowering her year-end target on the S&P 500, citing economic growth concerns. Following the S&P 500's 10% drawdown, RBC Capital Markets head of U.S. equity strategy, Lori Calvasina, lowered her year-end target for the S&P to 6,200 from 6,600. Calvasina's revised outlook on the S&P comes after both Goldman Sachs and Yardeni Research lowered their targets last week. While we don't believe that a pullback beyond the 10% drawdown that has already been sustained is inevitable, we do believe that the path for stocks between now and December has gotten rockier with stronger headwinds. So what's Goldman Sachs got to say? They're talking oil today. Crude oil's recent descent has prompted Goldman Sachs analysts to lower their price target for the year, in part due to expectations of softer economic growth amid President Trump's tariff policies. The firm reduced its December 2025 forecast for Brent by $5 to $71 per barrel. Brent prices have fallen more than 3% year to date. Initiatives by the Trump administration to broker a peace deal between Russia and Ukraine and efforts for a potential nuclear agreement with Iran have eased supply worries. Meanwhile, some economists have cut their growth forecasts amid a string of disappointing data and uncertainty over Trump's tariff policies. Well, you can only do so much so fast. We're now almost 2 months into the new administration. BYD on Monday unveiled a new platform for electric vehicles that it said could charge EVs as quickly as it takes to pump gas, and announced for the first time that it would build a charging network across China. Hopefully they'll have better luck than President Biden had with the 8 charging stations we were able to build here in America for $8 billion. The so-called Super E platform will be capable of peak charging speeds of 1,000 kilowatts, enabling cars that use it to travel 400 kilometers on a 5-minute charge. Charging speeds of 1,000 kilowatts would be twice as fast as Tesla's superchargers, whose latest version offers up to 500 kilowatts charging speeds. Fast charging technology has been key to increasing EV adoption, as it is seen to help assure EV drivers concerns over being able to charge their cars quickly. Now, I don't know if this applies to cars, but I've seen it with my own phone. Some chargers will charge your phone really quick, but it doesn't seem to last as long. And then there's other phone chargers. It seems like it takes forever to get a full charge, but then the thing lasts for a couple days. So, are we comparing apples to oranges here? No, we're comparing cars to telephones. You know, I bet you Jen, whatever it is, doesn't even think of their iPhone as a telephone or their Android phone as a telephone. I don't know what they call them. But, I mean, really what we have is a computer we can put in our pocket, and one of the features is you can make telephone calls. Yep, there you go. Home builders. Confidence drops in March to lowest level in 7 months. Builders are feeling less confident about the housing market as they navigate economic uncertainty, the threat of tariffs, and high housing costs. The National Association of Home Builders index fell to 39 in March, down 3 points from February and the lowest level in 7 months. According to Bloomberg data, economists were expecting a reading of 42. A reading below 50 indicates more builders view conditions as poor rather than good. And last, PepsiCo, which trades under the symbol PEP, PEP, will acquire prebiotic soda brand Poppi, that's Poppi, for $1.65 billion. PepsiCo said the deal includes expected cash tax benefits of some $300 million, putting its total value just shy of $2 billion. The probiotic beverages like Poppi and rival Olipop come with lower amounts of sugar and higher fiber content because of ingredients that can improve gut health, according to the Cleveland Clinic. And if I'm not mistaken, I think Poppi was on Shark Tank some time back. Could have been Olipop, but I think it was Poppi. And I could be wrong. Lord knows it happens. All right. Logic 247. Now, last week we ended up with a stellar week. 6% stopped out for the entire week. But it's a rocky Monday. We're in week 346. Over the last 346 weeks, we have issued over 19,180, I believe it is, individual handcrafted alerts. Call it practically 19,200, almost. A few more to go. We'll hit 19,200 sometime this week. And what we've averaged over those 19,200 individual handcrafted alerts is 20% or less being stopped out based on market structure and a simple process we teach all of our passport holders in their one-on-one mentoring sessions. Now, since the market opened last night at 6 p.m. Eastern, we issued a total of 6 logic alerts. And when Valerie did the recap this morning, we were still waiting on the outcome of 3. That gave us 3 actionable alerts, of which 1, or 33%, would have been stopped out based on market structure and that simple process we teach all of our passport holders. Now, it's so interesting. Last week, we had 0% stopped out, or 0 alerts stopped out up until I think it was Thursday. But I kept saying, it's early in the week, we got more days to go. And so they came as expected. But last night we were only working with 6. We only got feedback on 3 so far. And so 1 stopped out. Again, what we've averaged over the last 346 weeks and all those alerts is 20% or less being stopped out. So, what do? Go back to the drawing board? Start from scratch? Figure something else out? No, we'll just keep doing what we've been doing because it's worked out pretty well. Don't you think? Now, the logic alerts are designed to teach you how to read a chart. If you're going to trade for a living, you want to be able to look at any chart of any market in any time frame, and with the help of our humble indicators, instinctively see where potential resistance is, where potential support is, and the windows of opportunity that lie in between those 2 points. The logic alerts, used properly, will help you do that. My goal is to get you to the point where you don't need the alerts, because you can look at a chart the same as I can. You can spot the potential resistance. You can spot the potential support. And what's in between? Oh, there's your window of opportunity. The logic alerts have an entry price, an initial target designed to help you get your goal for the day, quite often additional targets, and then a final trade to target. The logic alerts can come out anytime around the clock, 2 a.m., 2 p.m. Futures trade around the clock. We have traders around the globe. Our day session is their night session, and vice versa. So, this is what it looks like on a Monday. That makes it feel like a Monday. All right, long before Logic 247, we had our original alert service, the concierge trade alerts. They're different in a few different ways. Number 1, they don't come out around the clock. They're posted as a static report shortly after or before the Globex open each evening. Now, on Sunday nights, they tend to come out after the open because I'm working on the weekly zones. I'm doing all this different stuff. Okay. Now, all of last week, with the exception of Sunday, I managed to get them out at 5:55 p.m., 5 minutes ahead of the open. The previous week, I managed to get them out every day, 5 minutes ahead of the open, with the exception of Sunday. So, perhaps I've got a trend going. What this means is last night, 55 minutes after the markets opened, all of our members and all of our trial members had all of these targets. The S&P, the Dow, the Russell, crude oil, the NQ, gold, and silver. Now if we roll back to last Friday, it would have been Thursday night, because at 6 p.m. Eastern Thursday night, it became the Friday session. So we got them out at 5:55, 5:55, 5:55, 5:55, 5:55, and then last Sunday, yep, 10 minutes after. So there's no guarantee I'll get them out 5 minutes ahead of the open, but I do try to post a note in the discussion group every day that says the CTAs are scheduled for 5:55, or if it's a day when I don't think I'm going to be able to get them out, then I'll post that. CTAs will come out after the open. I mean, for many years, they always came out after the open. I started toying a few months ago with the idea of putting them out 5 minutes ahead of the open. And so when I'm able to, it usually works out pretty good. So again, all members, all trial members had all these targets 1 hour after the open. So let's go look at the daily chart. We're going to make some changes. You know how long we've had these fibs on? A really long time. Since September. But we've rolled now. Okay? So you can see that the high, the all-time historic high, which was December 6th, see, that's above the highest fib. But because of this huge sell-off we've had, I'm going to do something a little different. I'm going to get rid of them. I'm going to get rid of this. Now you can see where we found resistance today. I should probably leave that one on, but I'm just going to, it's time to clean up the charts. I like a clean chart. So just remember that we had resistance today at that trend line, which is now going bye-bye. And these were important at the time they were put on the chart, but they're no longer important at this point in time, so we're just gonna get rid of them. Huh. Yeah. Okay. So let's do that. Okay. So we're not even gonna worry with any fib extensions right now because we've done nothing but go down of late. So we're just going to work on the fib retracements. And I'm sure many of you know what I'm about to do. Now before, the fibs went from the low of, I think it was last August. Yeah, because we looked at it a couple times last week. A low put in last August up to the December 6th high. Okay. But now that we've rolled to the June contract, it's a little sparse over there in those parts, eh? So let's do this. Now, there's two things you could do here, okay? You could go from the December 6th high to the low. And that would probably be the proper thing to do. All-time historic high. 62.33. And I got it at 62.32. Maybe that's a sign. All right. But I don't think that's what I want to do. Now, where are we? We're at the 24. I know you are accustomed to looking at the 24 up here. That's because you've been in an uptrend for years. So we're now at the 24% fib retracement. Now, I could have just gone from this high, okay? It wouldn't change things that much. Well, here, I'll show you how much it would change it. See the difference? Really not much, huh? So, let's just make it simple. How about that? Now, how close did we get to this high? 62.25. Let's see if we can get it on 62.25. Nope. Nope. I should have left it alone, right? How often is that the case in life? 62.23.75, and I was shooting for 25. Here I go, messing with it again. Oh, what did we do? We went 2 ticks above it? Yep, 2 ticks above it. Okay, so we'll just call it 62.25 because that's the high. And maybe some other time I'll fiddle with these. So these are the fib retracements. But these are what are called reverse fibs. Did he say reverse fibs? Yeah, he did. What does that mean? Well, when you're in an uptrend, you draw from the low to the high. When you're in a downtrend, you draw from the high to the low. How close did I get to that one? 55, 59. That's close enough. Okay. All right. So again, it's important to understand. In the uptrend, you draw from the low to the high. But in a downtrend, and trust me, this is a downtrend. Okay. So we've already bounced up to the 24% fib retracement. Also, the step line has crossed red and falling. So our next major obstacle is just shy of that 38% fib retracement. Then the daily BBC, then the 50% fib, then the 62% fib, and then this bearish cross right here that led to this extended move. That is potential resistance, big time. But of course, we'll be talking about that when it happens. So maybe I'll stick this over here. Maybe I'll stick it up there. Okay. So we can stay focused. So a daily chart gives you the big picture look. Institutional traders, the ones with massive accounts that trade massive size, they look at daily, weekly, and monthly charts the way you and I look at 30-minute charts, 5-minute charts, tick charts, and range charts. So I encourage you, spend 2 minutes each day with the daily chart of whatever it is you're getting ready to trade. Number one, you get a free look over the shoulder of the deep pockets that move price so you can see what they're doing, okay? And you're able to identify major areas of support and resistance. Now, you can't really see anything. This spot right here. Well, you can see these little clusters over here. Now we could just put it on the cash market and then that would smooth it all out and that wouldn't be an issue. But it's been so long since we've had reverse fibs, I have to get my mind thinking in the other direction. Because we've just been climbing, climbing, climbing. But after we put in the all-time high on December 6th, we then double topped right here. And down we go. So now we're looking for areas of major resistance. So you get the free look over the shoulder of the deep pockets that move price, and you're able to identify where the market is most likely to find support and resistance. Major areas. Like this low. See, on your smaller time frame, you got no idea that you ran into the 24% fib retracement. And when you hit a fib on a daily chart, there should be a substantial reaction. So we'll see what happens here. I mean, we're definitely off the high of the day, but we're also off the low of the day, and the step line has crossed red and falling. Remember we talked for a couple weeks, I think, about how those two were just like married together all the way down? Now we have something decisive. So ultimately, when the step line crosses red and falling, price will retrace back to the VBC. The pullback to the VBC holds more often than it doesn't, whether it's pulling from below or pulling down from above. The pullback holds more often than it doesn't. Remember that. It's important. Okay? And it's called the VBC because it stands for bull bear cross. When price crosses above the green line, we expect higher prices. When price crosses below the green line, we expect lower prices. Higher prices, lower prices. And because the markets are fractal in nature, so is the BBC. In other words, you can put it on a 1-minute chart, you can put it on a monthly chart. You're going to get the same results, but it's always relative to whatever time frame you happen to be looking at. Now, these are last week's zones. The new zones came out this morning at 6:15 a.m. Eastern. But all alerts that go out on Sunday night are based on the previous week's zones, because the new zones haven't come out yet, right? Okay, so on tomorrow's broadcast, you'll see this week's zones. But as you can see, last week's zones are kind of still doing their job. When price drops to a zone, we expect support. And as you can see back on Friday, when price rallies up to a zone, we expect resistance. Only one of three things happens when price encounters a weekly zone. 70% of the time, you're going to get consolidation. It can look like that. It can look like that. It can look like that. 20% of the time, you get rejection. That's what that looks like. And 10% of the time, the slice. That's when price slices through a 30-minute candle slices through the zone like it's not even there. When that happens, typically, as it runs out of steam, it will retrace back to the zone it sliced through, then continue in the direction of the slice. Now, this was a green candle, and this was a green candle, but it would need to take out this high for us to say that it really did continue in the direction of the slice, for the most part. Okay. All right. So I think I said the vertical lines separate today, Monday. Here's Friday. Back here's Thursday. And on tomorrow's broadcast, because the new zones are out as of 6:15 a.m. this morning, we've published the zones now over 15 years, since December 14th of 2009. This past December marked 15 years. So this was the open, okay? And so remember, these targets were published 55 minutes after the open. Here's 30 minutes. Here's 30 minutes. So where were we? We were straddling the BBC. And what do we know about price pulling back to the BBC? That it holds more often than it doesn't. Eventually it will trade through. That keeps the markets fluid and tradable. But the pullback held, and it held for hours overnight. And then about 4 a.m. we started to get liftoff. Okay? Price, step line, balloon climbing, BBC. So we got a leg, we got a retracement, pullback held. And we got a leg right up to the zone where we got rejected, just like we did on Friday. That sent price. See the wick? Came down to balloon climbing and the black step line combo. And that rocketed us up to the high of the session, 57.26 1/4. Then we pull back to the zone, and now we're just consolidating. Okay. Now, because we never pulled away from the BBC to the downside, there was no reason to worry about the short target. I mean, here, this was just slow go. We got a few things happening this week. Number one, we've rolled over the indices and crude, and it's Fed week. Either one of those alone kind of screws the market up for a week. So now we got two things in the mix. So we'll see what happens. Now, price is trying to overcome balloon climbing, but once balloon climbing gets directly above price, it can actually become resistance. See, on the way up, it's very bullish, but once it gets directly above price, yeah, potential resistance. So if we break through, now you got this little double top right here, and then potential resistance here, here, and here. Let's go to the Dow, which looks pretty similar. All right. Now, remember the targets didn't come out until the last 5 minutes of this 30-minute candle. Okay. We consolidated till about 6 a.m. on the Dow. And then we got enough of a move to get your goal for the day. Leg and a retracement. That's how markets move. They don't move, price doesn't move in a straight line. You get a leg and a retracement, then a leg and a retracement, then a leg and a retracement. Anyway, so in the other direction, leg, retrace, then we get a leg. Takes us through the long target all the way up to the zone overhead. Now that's the zone that was published last Monday morning at 6:15 a.m. Eastern. And here it is a week later, still doing its job. When price drops to a zone, we expect support. When it moves up to a zone, we expect resistance. 1, 2, 3, 4, 5, 6 30-minute candles. That's 3 hours. Now it looks like this one. It's right there. This just might be the one that takes us away. On the Russell, okay, here's the open last night. We dropped to the BBC. We got below it. We had red and falling. It took us down to the zone at 2041/42. Support will always send the market looking for resistance. So we got a leg, a retracement, and a leg. And we spike the target and hit the zone pretty much to the tick. That zone is 2061/62. Okay. So then we get through the zone, and as we look left, we had this wild child from back the 12th. Yeah. Monday, Friday, Thursday. That was Wednesday. Okay. I'm sure that was some news-based event. Yep, 8:30. news time. So, if we overcome these highs, and market structure says this area should potentially be good resistance, even though it was a news-driven event. That's where price went. That's the truth of the matter. So, from 2084 to 2094, that's 10 points. Not 10 ticks, 10 points. So, because we never traded below this zone, there was no reason to be concerned about the short target. In Q, here's where we open, drop to the VBC. Starting to look pretty familiar, right? That's how the indices are. We consolidated along the VBC. Then we got liftoff, 4 a.m. Took us right up to the zone where we consolidated. Remember, that happens 70% of the time. We got a little leg and then a little retracement, and then boom, we hit the target. Spiked the target. Retraced back to blue and climbing and made another run. In fact, we hit the zone again down here. 892. We might have missed it by a couple ticks. And that sent us right up to the zone overhead. Now again, this is the zone that was published a week ago today. And when price moves up to a zone, we expect resistance. When it drops to a zone, we expect support. Resistance. This was resistance for a bit until we went to the next zone where we found resistance, which sent us back down to the zone where we now have support. But notice that there's red and falling overhead. So this may, remember, the pullback holds more often than not, but eventually it trades through. This is one of those conditions where it might trade through. We'll see what happens. If there's enough bullish buyers out there to overcome red and falling, then there's room to trade up here. If price drops below, you want to get below that low. Yep, you got a bullish cross right there. That's potential support. Probably better off waiting to get down into this area. Then you got a big wide open space. From 747 down to 680. That's a whole lot of ticks and quite a few points. Okay. All right. Crude oil. Remember, we're now on a K contract. Gap higher opened last night. Took us right up to last week's zone. Now remember, these zones were based on, and all those zones we just looked at were based on the previous contract. Important prices, important areas are just that. And I just showed you that. I should have pointed it out and reminded you on each of those charts that those zones that you saw working so effectively on the June contract were actually created for the contract we just left. Market structure. So, targets came out on this candle right here. Well, we were 5 minutes to this candle closing, and then the targets were published, and got to move up and a little retracement, and then bang, we hit the target. That would be the high of Thursday right there. Plenty to get your goal for the day. Consolidated for an hour, then continued up to the zone, spiked it, came back down to the BBC, support, held, it held, sent us back to the zone, overshot it by a tick or two, then a retracement, and then we put in a lower high. So we got a high, we got a lower high. Price comes back to the BBC, consolidates, but look at all this red and falling. Okay, so that has taken us below. Now, have we filled the gap from last night? We have not. This is where we closed on Friday. This is where we opened last night. So we need to see price get down into like 66.95 to close the gap. Now with the indices, the gaps tend to close, the Sunday night gaps. You don't see gaps very much with futures because they trade around the clock. But with stocks, well, stocks do trade around the clock, but in America, if you're an American, if you have an American trading account, you're limited to 9:30 a.m. Eastern to 4 p.m. Eastern. And I know there's some after-hour stocks that don't get traded a whole lot. But anyway, point being, where are we at now? We pulled back to red and falling and found resistance. But the step line is just starting to cross red and falling. You see we got a little green candle here? So what you may have is a low, a higher low, a higher low, and we actually may go back to the VBC. By tomorrow, things will probably be pretty sideways as we head into the Fed announcement on Wednesday. Gold. Okay, here's where we opened last night. We consolidated along the zone. We dropped to this spot right here. Back up to the zone, down, target, back to the zone, back to the target, and here we sit. All right, we'll pick up with silver and our good word for the day. When I come back, Michael's going to give us a recap of what happened this morning in the live training room. Then we'll do some live trading on the TradingView platform for about a half an hour, and I'll be back.
All right. Here we go. Bringing it over here. There. All right, you should see it now.
Yep. Looks good.
Okay. Good. Something happened here. Let's go in here and see what I did or undid in there. Anyway, we'll get back to that. All right. Good afternoon, everyone. Today is Monday, the 17th day of March, 2025. Now, we're almost a quarter of the way through the year already. Wow. If you have not taken a free trial with us and you want to, go here to mytradingiq.com, click on the purple button right here. There is no credit card required for the trial. You click on that purple button and it will bring you to this registration page where all that we ask for is your name, your email, and your phone number. Down at the bottom, it gives you TradingView login ID. Okay, we need that to enable the indicators for you. Without that, we cannot enable the indicators for you. So make sure you give us that. Okay. If you have a NinjaTrader and you want to chart on NinjaTrader with what we do have on Ninja, you can give us your NinjaTrader machine ID, and we'll enable that for you. It's not the indicators that we use in the room. Okay, but it is the old school stuff is there on NinjaTrader. All right, so with that, let's get into the spreadsheet. We had a pretty good day today. Had a pretty easy start, and I stopped out on the NQ shortly after that. But anyway, if you're going to read the spreadsheet, you have to read all the CFTC risk disclosures down at the bottom. Today is the 17th day of March, 2025. Made 262 ticks on the NQ, 126 on the Russell. So the Russell, I don't think we stopped out all morning on the Russell. Maybe 10, 30, 80, 97, 110, 126. Nope, we didn't stop out all morning on the Russell. We did stop out a couple times on the NQ. The gold is where we got the goal for the day. Actually, our very first trade on gold is where we got the goal for the day, and we were up 17 ticks at that point. But then the gold and the ES are the ones that really brought me down, and then I eventually got back on both of them. But we ended up with +2 on the gold and +30 on the ES. So $2,335 a contract this morning. Took 3 minutes and 1 trade to get the goal for the day. As I said, that was on gold. We got 17 ticks on that first trade on gold with 10 contracts on. And we took a total of 55 trades this morning. No shortage of trades. So on the month now, we're at $13,352. That's over 6 trading days, averaging $2,225 per contract per morning session. Now remember, I took a week off this month, so that's pretty good considering that it's, if I had that extra weekend, then we'd probably have a banner month on our hands. Anyway, on the year now, we're at $70,835 over 43 business days, averaging $1,647 per contract per 2-hour business day. And over here, if you quit trading when you got the goal for the day and you added 1 contract per month, so far this year, you would have only had to work 6.76 hours. You'd be trading 3 contracts right now, and you would have turned 0 profit into $12,360 in profit in those 6.76 hours. Over 1,800, you'd be averaging $1,826 per hour on the year. If you followed the 24/20 blueprint, you started with 1 and added 1 a month. All right, so let's get into the actual trades. So in here now, we'll start out with the gold. As I said, the gold, we started out with a big trade right at the beginning, and then we stopped out, and we stopped out, and we stopped out. But we started out here with 17 ticks on this very first trade. Then we had a break even on the follow-up. Then we had 5 there that got us to 22, and that was the high of the day on gold right there. Then we stopped out minus 10, that got us down to 12. Then we stopped out again right there, that got us down to 2. Then we went from 2 to 4, and then we stopped out again, and that got us down to minus 6. And then we went from minus 6 to minus 5, and then minus 5 to plus 2 right there. And that was where we ended it on the morning session. During the break, it looks like there was a short right here from this bar that would have stopped you out, a long right there that would have gotten it back, a short right there that would have been a break even, a long right there that would have been profitable, a short right there that would have been a break even, a long right there that would have been profitable, a long right there that would have been profitable, a short right there that would have worked out, a short right here that would have worked out, a long right here that would have worked out, and then nothing. So the gold was kind of back and forth today. The Russell we were good with all morning. See, all those trades, all profitable trades. When we started out, our first trade on the Russell was a 10. Then we got 20 to put us at 30. Then we got 20 more to put us at 50. Then we got 30 more to put us at 80. Then we got 17 more to put us at 97. Then we got, I think, 14 more to put us at 111. Yeah, 14 more to put us at 111. Then a break even, and then 15 more to put us at 126. And that was it. You see all this nice chop that we had in there? That was a beautiful chop that we had in there on the Russell. What did I do the example on this morning? Was it gold? Did I do the example on? I think it was. When I was showing, I can't find it. Anyway, let's just go to the end. Some more nice chop in here. You can see in here, I'm gonna let me put the trigger colors back on the right way. Let's just go in here. That's wrong. Let's undo that. There we go here. There we go. Okay, so during the break, there was another trade right here. That was after. During the break started right in here. So during the break, there was a short right there that would have worked out, a short right here that would not have, a long right here that would not have. That's on the Russell, right? And a short right in here that would have worked out, a long right here that would have worked out, and a long right there that would have been a break even, a short right here that's still working right now. And that was it for the Russell today, right? The ES, now the ES, we were back and forth a lot on. The low on the day on the ES, I think, was minus 19 ticks. And the high on the day is plus 30, what we ended at. But let's go back and look at this. There are a bunch of trades here on the ES. See all those stop outs? A bunch of trades on the ES. And here we go. So right here, our very first trade on the ES, we picked up 1 tick. We had a break even, then we picked up 4 more to get us to plus 5. Then we picked up something else there that I didn't write down, it looks like. And then we stopped out. We had a break even and then a stop out that brought us to -5. So I didn't write down whatever that profit was there. But we went to -5, and then we had another -10 right there, got us to -15. Break even, then from -15 went to -13, then -11, then break even, then -1. And then we went back to positive side right here. We went up to +7. And then we stopped out again and went to -3. And then we stopped out again, went to -13. Then we went up to -9. So we got a 4-tick gain, went to -9, then a break even. Then again, we stopped out, went to -19. So I had a lot of stop outs on the ES today. From -19, we went to 1. It looks like we went to 1, and then we went from 1 to 12, and then 12 to 20. No, 12 to 14. Then 14 to 18, then 18 to 22, then a break even, then 22 to 26, and there's one missing in here, 22 to 26 and 26 to 30, and there's something that I didn't add on right there. Whew, that was a lot of trading. A lot of trading on the ES today. We had 5, 10, 15, 20, 24 trades on the ES all by itself. And let's see, going through the rest of it here during the break, there was a short there that would have worked out, a long there that would have given you a break even, possibly worked out for profit, a long there that probably would have stopped. It might have been a break even, depends where you got filled. A long here that would have been profit, a short here that would have been profit, a long here would have just about stopped you out depending where you got filled, but it would have been profit if it didn't stop you out. You would have had some profit on that. And you go all the way over here, there was a short there that would have worked out, a long there that would have worked out, a long there that would have worked out, a short there that would have worked out, a short there that would have worked out, a short there that would have worked out, a long right here that would have stopped you out. A long right there, that would have, depending where you got filled, it might have been a break even or a stop out. But you can see there was just a bunch of opportunity. I'm not going to go through every single one. There was a bunch of opportunity on the ES. The markets were nice and choppy today. Nice and choppy. The NQ, let's just do the alt back thing on the NQ and get it all the way back there. We didn't have a ton of trades on the NQ, but we had enough. Our very first trade on the NQ was this one right here. We stopped out. So we're -60 after that one. Then we picked up something there. We got to -36. Then we picked up 32 there. That got us to -4. And then we got to +7. And then, I'm sorry, I didn't get to +7. We got to +71. So it was a 75-tick gain there. We went from -4 to 71, then 71 to 111, and then 111 to 186. So we got a 75-tick there, then a break even. Then 186 up to 202, 202 up to 226, 226 up to 230. And then it started going upward after that. Okay, 230, we had a break even. Then we went from 230, I'm sorry, we had a break even, then went from 230 to 250. And from 230 to 250 to 247, and then we stopped out and went down to 187. And then we had a 75-tick gain that got us up to 262. Okay, so there's one trade missing in there somewhere. But you can see if you look at the numbers here, you see you had some good follow through most of the morning. Some really good follow through. I did stop out a couple of times, -60 ticks, but most of the trades were 20 ticks or better on the NQ today. All right, so there was plenty of opportunity to trade in all the markets all day long. Okay. All right. So if you have not taken a free trial with us, go here to mytradingiq.com, click on the purple button. No credit card required for the trial. Once you click on that, bring you here to this registration page. All we ask for is your name, your email, your phone number. There are 5 multiple choice questions. Down at the bottom gives you TradingView login ID. If you don't have TradingView, then all you need to do is go here to trading platforms. Click on that, scroll down to here where it says trading view. And really, you're just going to click on this. You can watch the video. It's 3 minutes telling you what to do. Click on this. It's going to bring you here. Just choose a platform. Click on monthly. $14.95 will get you started. All right. Plus, we'll get you 4 charts. $14.95 will get you 2 charts. Okay. So you probably just want to do that. All right. Let's get back into the trading right now. Do we have anything? There was just a long right here on the S. It's already gone 4 ticks into profit. There's nothing over here on the NQ right now. Now, one of the things I haven't done in a while, well, I haven't looked at the question box. Start there, I guess. Okay, so there's no questions. One of the other things that I haven't done in a while, is look at the crypto stuff. I don't know where that is anymore. I used to have it here. Here it is, Bitcoin. Okay, I didn't realize Bitcoin was down in the 80s. How far down did it get? Okay, so it was back in December where it was way down there. It actually just came off the low since Trump became president. Right here. So let's look at this in a little bit bigger picture. Crunch it up. Okay. I know we looked at this before. I know we did some analysis on this before, and this is like head and shoulder pattern where it's building the head right here. If you're just looking at it in retracements, then this is a good bounce point right here. If you're just looking at it from the retracement perspective, okay, because it'd be like from right here up to here, you're at the 50% mark right there. It's a good bounce point for it if you're just looking at retracements. And I suppose that's what we probably should look at. There's no real justification for it to go down a ton right now, as far as I know. Another thing that I haven't looked at really is the overall markets. I think I had that out here on 6, didn't I? No, that's the ES. Let's go out a little further. 7. Nope. How about 8? Nope. I was looking for the SPX. That's what I was trying to find. But I guess I can just put one here. And SPX, SIBO, and we'll look at that on a daily. Okay. So I know this is what Dwayne goes over in much more detail than I'm going to right now. But you're looking at basically the same thing here as we were looking at with the crypto. Bang. Here's our 50% retracement of that move up. That was from August of last year. It's had a good bounce point. So is crypto. They're both good bounce points right here. So who knows? Who knows? That's why I trade in minutes rather than days. Nobody knows. All right, there is another short here on the ES right now. If I could find my DOM, I might put it on right now. I'm going to try to record a piece of this, see if my audio is working right on the recording part. All right, so the short on the ES was actually from the open of this bar right here. It's still not too late to get into it if you wanted to. It hasn't gone into profit at all from the open of that bar. It only went up, not down. So I just put it on. I'm going to throw my stop at break even right now. And it should, if it breaks down below this swing low, it should get down to right about there. So I'm going to lock in some profit. It's gone about as far as it should go. So I'm just going to lock in a little bit of profit there. And I took a little bit of profit on it. And now it's not really reversed. If you were trading, if you were trend trading, you just had a long right here when it went into the oversold. If you did the conservative, you got a long when it came out of the oversold, right? But you see this kind of chop that we're in right here. This is great trading if you're doing divergence trades, this up and down stuff. The thing that I was looking for earlier was something I went over in the meeting this morning. You know, you get flat spots like that. The flat spots are where you stop out, right? And I'm short again from that last one right here. We stopped to break even. That was right here where it just went into the overbought. Exactly what I'm talking about right now. I got to lock in 2 ticks on that one, Now 2 ticks doesn't seem like a lot, but it's actually with 10 contracts on, it's $250. Okay, so with those two tick trades that I just made, I made $500. But what I was pointing out was, if you don't even look at the price right here, you can tell where the markets are choppy when they start to trend. Right? If you get flat spots like that, that means it's trending. Flat spots on the top means you have big legs up. Okay. Knowing what the indicators represent is kind of important. So when you have this flat spot down here, that means you had a big leg up. And you had this short move here. It's because you had a big leg up and it came back to the 50% marker. So you had a bigger move down. And then when it got down to 0, it was still going down some. All right. But then it went straight back up. Then it had a very small move down like that. Okay. And then it wiggled around a little bit and then it made it down a little bit more and then went right back up and right back down and right back up. And it went a little bit further. So you can see all that from what's going on down here. So the spots that you want, the divergence trades that we do in the morning, are those right there, like that one, oops, and that one, and that one, and that one. And all of these right here, even all of these, all of those right there. That's the kind of spots that you want. And they develop when you have short legs, when you're in chop, is when that happens. Okay, when you have chop like this, that's when that happens. You have a long leg like that, that's where it gets into the overbought. You have a deeper pullback like that, that's where it gets down here. It stays oversold. But all this stuff in between, that's where you want to be when you're trading the divergence trades that we do in the morning, right? That's where the money is made right there, back and forth and back and forth. I pointed that out this morning to Joan. She had asked, and I thought I'd share it with you guys too. Right? So when you're trading the divergence trades that we do in the morning session, that's what you're looking for. Chop is good. You want to be in chop. Right? All right. Well, don't have any more trades. We took 2 trades on the ES, 2 small wins on the ES so far is all we've done. And we don't have any more trades yet. The gold is about to give us a long trade here. We just need that to get down to the oversold by itself. That would be the blue getting down into the oversold by itself. And if it does, we'll just put the trade on. All right. It's a pretty simple process. The blue drops down there. I click right here. And we get the best bid. Okay. It's as simple as that. All right. Does anybody have any questions about anything? I see some more people are dropping into the room right now. I see a lot of you people are in on the web version of GoToWebinar. If you ever have the option, if you're ever setting up a meeting with me or with Dwayne or with Valerie, and you ever have the option of choosing between the web version or the desktop version, especially if you're going to have a meeting with any of us, choose the desktop version, okay? Because we can't control your mouse and keyboard if you have the web version. So, if you were counting on us to help you out in that way, we won't be able to. It's just noticing all the people. Like half of the people that are in right now are signed in on the web version. Now, in this kind of meeting, it doesn't matter because we're not going to try to take control of the keyboard and mouse. But if you have a one-on-one meeting with us, we might want us to do that. Wow. Okay, so everything's slowed down quite a bit right here. And, well, we don't have a lot going on right now. So we're just waiting. Okay. I'm going to slide this over. We don't have a trade there. All right, we have about 3.5 minutes left. In here. And that closed up, not down. The black and the blue are running together on that, and together on that, and together on that. So I really don't have a lot going on right now. But we will stick it out. Until the very end. Nothing there, or there. All right. Well, I can't make things happen, so we can go look at other stuff while we wait. I'll show you one more time. It's we got 2.5 minutes left, or 2 minutes left. So I'll show you one more time how to take the free trial. You go out here to mytradingiq.com, mytradingiq.com, click on the purple button right here. There is no credit card required for the trial. Just click on that purple button. It's going to bring you to the registration page. On this page, all that we ask for is your name, your email, and your phone number. All right. Down at the bottom, make sure you give us your TradingView login ID because the indicators that we're using are on the TradingView charts. All right. And Dwayne's still showing you stuff with his charts that's read-only stuff that is on the DT Pro platform. I'm surprised we still have access to that platform. It's almost 2 months later now. But it's read-only and it's all good stuff. It's stuff that he's always used. So he's going to keep using that. I want to show you guys one other thing. For those of you guys who are trading on using Sierra charts, I rolled this morning. Let me give it to you on this one. I rolled this morning to the M contract, right? To the M contract. And to do that, what you have to do is you click on chart and chart settings like this. Then this window comes up right here. In simple action, there's a couple of things you can do. Automatically roll over. You can just turn that to yes. Or to manually do it, you go here into symbol, click on the symbol, choose select, and then go in here and find the symbol that you want. All right. So the RTYM is the current symbol that we're on. We all rolled to the M. We rolled all the indices to M and the crude oil to K yesterday. Okay. That's how you do it. Pretty simple process. Okay.
You can pass it back if you don't have anything.
Okay. Yeah, we only got 10 seconds left anyway. So, all right. So with that, I guess we'll wrap it up. And again, if you haven't taken a free trial, go here to mytradingiq.com. Purple button, no credit card required. Fill out the form. Okay. With that, I can pass it back out to fabulous Phoenix, Arizona, in Studio A, overlooking South Mountain, America's largest city park. Dwayne is ready.
Yes, sir. Recap of the morning session.
Today it took 3 minutes and one trade to get to $1,700. 3 minutes and one trade, $1,700.
Good job.
Thank you. Thank you.
All right, guys. We'll wrap this up real quick. We left off on gold. We already discussed that. And the vertical lines, of course. Oh, Michael, I don't know if you're still there or if you're already gone.
I'm still here.
Are you?
Yep.
I redid the daily chart. We now have reverse fibs.
Okay.
Remember,
and
we had regular fibs for. I mean, we've been in an uptrend for
yeah.
a couple. I can't remember.
Forever. Right.
I can't remember how long it's been since on the daily chart we had reverse fibs.
Yeah,
instead of drawing from the low to the high. Remember in the workshop this past Thursday night, I think it was some day in August was the low of last year. But with the rollover and everything today, the all-time high is still December 6th, right here. Okay.
Mm-hmm.
But we are now, from this high to this low, we're at the 24% fib retracement.
Okay, I see right there on the way back up.
And then
Mm-hmm.
here's the 38. And then
And
here's
then right.
the daily BBC right before you get to the 50% fib retracement.
That's a good place for a wick right there.
Yeah, because you've got these lows here, which are a little bit below this low, but anyway, so that's where we're at. So the
Okay.
next major obstacle will be the 38% reverse fib, then the daily BBC, the 50, the 62, and then this bearish cross that led to this huge move down. That should be like a brick wall as far as resistance goes, as price is trying to climb. And nobody will know why, but we do.
Mm-hmm.
So
We do. We do.
Yeah. Okay.
Excellent.
All right, guys. The only market we didn't cover was silver. This is where we opened last night. And like many of the other markets, we just consolidated along the BBC. It was pretty quiet for hours. Took a little dip down. You only need 2 pennies to get your goal for the day in silver. And then it was back to the BBC. The pullback held. And then we came down, hit the short target. Back to the BBC, the pullback held. And that sent us back down to the short target. And we got a little bounce there. And we traded through the short target. And these lows right here. See this area right here. That's an area where you would, just looking at the charts, you would expect support at this area right here. And so it overshot it by a tick or two. But people always say, how far left do you have to look? As far as you have to. Okay? And there we are. That low was 33.98 half. This low was 95 half. So we were like 3 pennies off. So now we've actually gotten above the BBC. Once we hit the support, market goes looking for resistance, and resistance sends us looking for support. Now notice that red and falling got below price, and when red and falling gets below price, it becomes potential support because it's often on its way to becoming blue and climbing, which is bullish. So you can see down here, red and falling turning to blue and climbing, red and falling turning to blue and climbing. So here we have a situation where we got like a triple top right here. Going back to Friday, these 3 highs are really close together. Then you got a lower high, and then that spiked a little bit higher than that high, and then a lower high. But you got blue and climbing here. So remember, you only need 2 pennies to get your goal for the day. The high of this candle was 34. We'll call it 32. No, 31, 34, 30. I'm sorry. The high was 34. 36. And we're at 32. It's really tight in there. 34.39 to 34.41. I mean, that's 2 pennies. Unless price gets up into this area, I would recommend just go look for a different market. Silver's not really the greatest market for beginners anyway. But now in tomorrow's broadcast, you will have this week's zones showing. But as you can see, price goes from zone to zone, back down to the zone, up to the zone, and now we're just consolidating sideways. We had some really good examples. We talked earlier that if the Dow or the ES could overcome this high, that we just might see last week's zone. And we talked about how price was sitting on this zone that was created a week ago, or published a week ago Monday morning. And it looks like we're headed to that zone from last week at 734/35. And all these hours are consolidated at the zone from a week ago. But the new zones will be on the charts tomorrow. The reason for it, of course, is because any alert, whether it's the CTAs or the logic alerts that go out on a Sunday night, they have to be based on last week's zones, because the new zones don't come out till Monday morning at 6:15 a.m. Eastern. So if the market wants to rally, well, there we go. There's room. The ES is at 57.34, and so we've overcome that 24% fib. So if buyers stay committed, now the sheer fact, look at all this time that the black step line and red and falling, it was just like one thing. I don't know that I've ever seen that before, or at least don't remember it, which doesn't mean anything. But the step line has crossed. Now, see up here how it was on the left side? Then they got just glued together. But we've had some decisive action. The step line is definitely crossed, red and falling. So what years of history tells us is that price will now attempt a retracement back to the BBC. Might hit the BBC, spike up, touch the 50, and then you get another leg to the downside. Or it could overcome it. And there's a 62. Then of course we've got potential resistance up here. But for now, trade what's in front of you. And now that we're above, let's see, yes, that zone was 34.35 last week, 34.35. So if we get up to 42.43, I mean, you could potentially have a really nice run into the close. The markets definitely look bullish. In fact, it's interesting how much price has risen in such a short period of time. We know that price falls quicker than it rises because it takes financial commitment for price to rise. But for price to fall, all that's required is for the institutional buyers to hit pause on the buy side. So for the investors in the audience, this should make you feel a little better. Okay, markets at least attempting, like we said, I always say, any stock can go to zero, but the indices never will, because they're constantly reshuffling the deck, getting rid of the weak companies, bringing in the strong companies. Well, that's rigged. Yeah, it is. So take advantage of it. It's done that way on purpose. Okay. Alrighty then. If you want to become a member, just send us an email to support@cfrn.net. In the subject line, put "I would like to become a member." In the body of the email, put your name, put your phone number. We're not going to call you. We don't have a phone room or a sales department, but we will send you an email that explains exactly what it means to become a passport holder. Number one, you're going to get 2 hours of live training every trading day. Now, it's an interactive environment. That means as Michael is putting on and taking off trades, explaining every move he makes, every trade he takes, You're trading along in your demo account to qualify to go live and asking every question that pops into your head. And yes, Michael can manage 4 markets and answer your questions and explain what he's doing all at the same time. So when you're on your trial, don't think you're going to interrupt, and especially once you become a member, don't think you're going to interrupt the flow of things by asking questions. Okay? If it pops into your head, ask. And because it's a mechanical methodology, the rules don't change. So if you ask a question today, you're going to get the same answer that you would have gotten a month ago or 6 months from now. Okay? And pretty soon you'll literally run out of questions. You'll start struggling to find new questions. That's when you know you need to be focusing on execution, because you've already got all the questions answered. You understand how the methodology and the strategy works. Now you just got to fine-tune your execution skills. And it's not designed to trade 100 times a day. It's designed to help you get your goal for the day, and then you need the discipline to put the mouse away. And that's another place where a lot of people struggle. Man, I was up $500, and then I was by the end of the day I was down 1,000. Okay. Well, what would have happened if you had stopped when you had your goal for the day? Now, 2 points in the ES, that's $100 per contract. The 2420 blueprint is designed to help you go from 1 to 20 contracts over a period of 24 months. So you start out in sim till you put together 10 consecutive days in a row where you reach your goal in 10 trades or less. Once you accomplish that, the blueprint will give you the green light to go live with 1 contract. Now your goal is to increase your account balance by $2,000. Once you do that, the blueprint will give you the green light to add a 2nd contract. So now the same 2 points are worth $200 a day instead of $100 a day. The blueprint will tell you when it's time to add number 3, number 4, number 5, number 10, all the way up to number 20. But you only add one at a time, and you only add with profit you earned in the market. If you have the self-discipline to follow that, it will sure make it a lot more difficult to blow up an account. Not impossible. I mean, you have to break some rules, but yeah, you still can. Show up, do the work, follow the rules. It's pretty simple. 9 out of 10 new traders fail because they don't have anyone to teach them how to trade. And trading can be a lonely business. So, 2 hours live training every trading day. Plus, you have access to private one-on-one mentoring. The strategy you learn, the indicators you own as a passport holder are fluid across all markets and all time frames. Stocks, futures, crypto, Forex, ETF, doesn't matter. Price flows the same across all markets and all time frames. From support to resistance, back to support, back to resistance, over and over, again and again. It's a never-ending cycle. As a passport holder, you'll get the Logic 247 alerts around the clock, the concierge trade alerts every evening the second they're published. Monday mornings, you get the weekly trading zones at 6:15 a.m. Eastern, and once they're published Monday morning, they're carved in stone for the entire week. They don't change in any way whatsoever. You're able to attend the members only workshop every Thursday night at 8 p.m. Eastern, and you get the golden key that opens the private channels in Telegram. We've got public channels, we've got private channels, but once you become a passport holder, you've got access to everything. Everything a trader needs all under one roof, one low price. Just send us an email or go learn more at mytradingiq.com. Okay, let's wrap it up with our good word for the day. On Friday, we talked about what's the most important thing to you. Today, live with integrity at home. Genesis 19:14. But to his son-in-laws, he seemed to be joking. Make your life an open book. Establish a system of values against which all of life is judged. Walk with God. Maintain your integrity at work and at home, and you'll make the right choice every time. Lot failed to do this, and it cost him dearly. Genesis 19:14. So Lot went out and spoke to his sons-in-law and said, "Get up, get out of this place, for the Lord will destroy this city." But to his sons-in-law, he seemed to be joking. When you lose your integrity, you lose your credibility. If you're a parent, guard your children physically when they're young and emotionally as they mature. Teach them to respect others and get to know the people they're dating. Be sure to check what they and you watch on TV and do on the internet. That doesn't mean you shouldn't be fun to be around. Show your lighter side. Don't be so preoccupied with work or church that you're a prude or a bore. Proverbs 15:13 says, "A joyful heart makes a face cheerful, but a sad heart produces a broken spirit." The point is, if you talk the talk, be sure you walk the walk. Lot tried to warn his family, but remember, to his son-in-laws, he seemed to be joking. Was he too busy making a living to teach them what mattered most in life? Did he say one thing and do another? We don't know. But any way you look at it, his loss was tragic. The truth is that your integrity, or the lack of it, will have consequences not only in your own life, but also in the lives of your loved ones. That's our good word for today. Thanks so much for tuning in. Whoever you are, wherever you are, may God continue to richly bless you with His mercy and with His grace. And I'll see you at the bell.
Remember this, there is no greater return on investment than to see a human life changed and given hope. As always, pray hard and trade safe. Any financial information discussed on this show is simply the opinion of our host, Dwayne Reeves, his co-hosts, and guests. To learn more about trading E-mini futures or to take a 1-week free trial in our live trading room, call 1-866-928-3310. 866-928-3310. Information discussed on this radio program should not be construed as a recommendation to buy or sell any security. Always do your own due diligence and consult with a licensed securities broker or financial planner before making any investment decision.